Good morning and welcome to Trading with Larry. Hope everybody is doing well. It's midweek, hump day, Wednesday. Uh, Market is lower. I have to mellow out because I've been very bearish, which I remain very bearish. But the move is taking longer than I thought. We're getting a little bit of acceleration in here, which I like. Things are looking a little better. It's funny in the business, and I saw this in the hedge fund space. You can make 50 winning trades. You can make someone $100 million, and if you lose $2 million, you're the worst human being that ever walked the face of the earth. So, for my subscribers out there that are watching, this is a long game. Not one person, including a robot, can make money on every trade. And as one of my mentors once said, if you're making money on 50% of your trades, you should be making money. So that's the mantra that we have. And our averages, especially this year, are so much higher than that. But I know our last couple of trades have been not the greatest. We have one today that we're going to hopefully, if the market holds up, although it's been coming in as we've been coming on the air, is gold. I got to get out of that thing. I know you're going to ride that, forever into the sunset. But
No, I actually see a good area maybe for the short term to get out, and I actually got out about half an
well,
hour
which
ago.
one is it? You see a good area or you got out? Well, if you got out,
I got I got out.
then
I'm fully out. I'm fully out, but I'm only
why,
borrowing at.
dude? I was talking about that level, and you said no way, it's going to go higher.
Well,
So
you have a way of getting in my head, so I kept that
uh,
level in mind, and I saw a couple of things, and then what you said came into play, and I'm like, it's a good time to get out.
hmm, all right. Well,
Only for the time being.
that
Only for the
doesn't
time
help.
being.
That doesn't help me and my subscribers because we got to wait. We don't trade futures at the opportunistic trader. I don't know a lot of people like on the retail side that do trade futures. It's very risky. Talk about a business where you really can't even get a hedge on. It's uh, it's in futures, so we're in equity. It's a little disheartening because the market is coming about. It's not a big move, $15, but anyway, hopefully we're going to exit that trade. I don't want to jinx it for a profit, small be it. So that gets us off what we call the schneid, and we'll have one profitable trade. Another trade we did overnight, which was a huge winner for us for our OFX product or our currency wizard product. We were long the euro. And we actually took 250 pips out of that trade, and we exited it this morning at 113 and a half, which it traded above that. Um, so that was a winner. So we put hopefully two winners up. Um, People are freaking out. We've probably had five losers or four losing trades that we haven't even exited. We've rolled, and now they've turned into winning trades. Not by a lot, but by a little. We're up on all of the roll part of the trade, and the products are up a lot. So I want people watching. You can't make money on every trade. Always trade smaller than you would. Use risk management and make sure that you're there to make more trades. I feel like I don't know if people bet the ranch on some of these trades, but if they bet,
100%. Absolutely. I think some of your subscribers and any subscriber to any trading service, uh, I don't think adequately knows how to use these subscription services, and I think that's on the customer and also on us to educate them exactly how to use it and really pound the table on correct position sizing. I think also what happens is you go on a hot streak, which I think you were on, and you do those 10 trades in a row that work. I feel like what happens is subscribers feel like the 11th trade, you got to bet the farm. All right. So
Well,
they have,
I mean, if that listen, if that's the case, that's absolutely
that is the case. That
well,
is
it's
100%.
ridiculous. They should have bet the ranch on the seventh trade. Why are they picking the 11th trade?
You
I
shouldn't
don't
bet
know.
the ranch at all.
Listen, you don't bet the ranch on anything, but this is a long game. And what's very different, I just want to put this out there. What's very different than what we do, and that what pretty much anyone else in the space, market newsletter, trading services, they they're selling the dollar and the dream. They're selling, hey, you're going to buy this stock, you're going to hold it for 5 years, and you're going to become, you're going to make 2,000%. But what we do is something totally different. We're grinding P&L, we're making profits, and our percentages are so much higher than that over a period of 5 years that if the panacea dream holds up and maybe you make 1 out of 10, you're still not ahead. So I feel like what we do by sitting in what I call the hole, in the market all day, watching every tick, watching all macro thematic stuff, and coming up with trades that make money, on a day over day basis, a week over week basis. That's such a better strategy to running money. Now, listen, the buy and hold strategy or finding, the one off stock, look, the buy and hold strategy is great for a certain portion of your money. You should invest for the future. You should put money away, and your assets should grow over time. We've been jaded in our country by a bull market for the last 30 years. Obviously, has helped all money managers and people investing. But if you go to like Asia, those markets haven't moved in 30 years. So we've been very lucky. And there's going to be a point in time here where the market does not go up. People think this is a gift that keeps giving, and it isn't. And I think you need what we do or a trading service that is going to help you add P&L on a day over day basis. And that's what we do. And again, I'm going to say this, it's a little facetious, but back in the day it was true. That's why I got paid the big bucks. Okay. So I had to make money all the time, every day, every week. Really, it was judged month to month, but it was really just too short sighted um, in the full picture. So here in our services, I just want people out there to understand this is a long game. There are innings in this game, So we want to make money, or score runs in every inning. But sometimes we have 3 innings where we don't score runs, but over the game, we're going to win the game every time, and we've done that for 40 years. And I want people, listen, I'm growing this little beard. It's been a while. I can't grow it, but I'm waiting for the market. I'm going to shave it when the market crashes. Okay. No, I'm only
Oh
kidding.
boy. Well, I'll tell you when you're going to shave it. You'll probably shave it sometime in September,
Yeah.
unless
Okay.
you think it's crashing. But I wanted to share something with you based on what you're saying. Take a look at this. This is the Barclay Hedge CTA index based on strategy. I like to look at these things every now and again. And you were mentioning a tough time that you may have been having recently. The market has been very difficult to navigate. I think even for the hedge funds, all of these strategies are down. Currency traders down, crypto traders down, overall CTA index down through this year. The only category that's slightly up is discretionary trading, non quantitative discretionary trading, which I think is very interesting that that's the only one up. Systematic traders down. So this has been a tough environment, even for professionals. So
I
if you can
don't,
get your people,
yeah, I don't feel really for me. We've been doing great. Again, now our trades on the second leg are working. So really, we only have like a couple of trades that are not working. out of probably 60 trades this year. So, whatever. I just want people not to risk too much, to be patient, to make sure that they're able to be in a position to capitalize over the full year and not be too skewed on certain trades. So, I don't really want to spend a lot of time on that. I
I have
really
one more.
want.
I have actually one more. I have one more question that I think would help a lot of people out. Let's say you have $100,000 account dedicated to your trading service. How would you size each trade?
You know, I would
For SPX, let's say for the SPX credit
I
spreads.
would start doing, especially if you're new to the service, do one contract, do two contracts. Don't get too big. The whole key to what I've done in my career and what we've done at the Opportunistic Trader since 2017, okay, which you look back and what is that? That's already 8 years. We've been doing this for 8 years to the public in this format, and we really haven't had a losing year on any product. I'm proud of that. Um, I think we were down on one a couple of years ago, potentially, but we've gone on a very good run for a really long time. So I think you got to trust in the process of what we do, trust in me, and realize that nobody can make money all the time. We're just trying to show you stuff that makes sense, and that kind of leads me in to what I've been telling people for at least the last, since the beginning of this show and the last few weeks from the newsletter is make sure that you have the 10-year note next to your, equity market. And as that thing goes above 4.5, you're going to see deterioration in the market, which you're seeing today. And
We're pretty close to 4.5.
what?
We're pretty close to 4.5.
We're way over 4.5, my friend. We're 454. Okay. We're way over 4.5. This is the high yields. The 30-year is at 505. Okay. And what I think is these yields are going to accelerate, and that's going to call, um, that'll call into effect. Um, what is going to happen in the equity markets, which will be a dislocation trade, which we're expecting. I think this is very, very, very dangerous. Um, so
Do you
that's
think
what
so? Interest rates since we got out of the bear market in 2022. We had a bull market in 2023. We had a bull market in 2024. All throughout those 2 years where the market was rising, uh, interest rates were high, and in during some parts of those markets, interest rates were actually rising. So that hasn't affected the market over the last 2 years. Why do you think it's going to affect the market now?
oh, because interest rates are higher than they've been. Even when we popped up to five very quickly, um, then it legitimately caused a little bit of a crisis, but then instantly the market came in like a half a point quickly. So um, you know,
I think if it matters now, it's going to be because de-dollarization wasn't an issue in 23, 24. Now it's at the forefront of what investors are thinking about.
mm, yeah, I I think it's always in the forefront. I think it was really dangerous, but now I think there's positions that are trading that are very, very, you know, correlated to this bond move. But in general, you know, there's an inherent bid I see in the equity market, which is strange to me. So, like we're down 40 S&P points today. which is, close to a percent, but not a percent. And there are buyers. It feels like there are buyers everywhere. To me, looking at the external board here, it looks like we should be a lot lower. Um, between headline risk, bond prices, um, currency prices. We talked about the currency ad nauseum. That's our next market. That we thought dollar would be weak, which it got really weak again. And we're at levels almost in the euro that when we made the low of the move at 4,800. So all of the things outside of the crazy equity market that somehow holds up are cluing me in that we should be way lower. Bonds are at levels where we were last time. Currency or the dollar is extremely weak. I know you looked to go the other way on the British. I don't think you ever did it, but the British
Yeah,
pound,
I did the I did the Euro GBP, which
well,
is
the
looking very
the British pound against the US dollar is pretty much at 134. It's high levels. So I'm looking at my board on Bloomberg and I think it looks, very weak. But on the other hand, you can't fight the market. The market is down a little bit, but it's, pretty unbelievable that it's held up so well and we're at 5,900. Again, the first part of a sell off is always the hardest part. And then once it gets into the channel, then there are no buyers. So right now there are buyers, there are inherent buyers. Um, interesting, Nasdaq is much better than the S&P today, which is strange in itself. And these markets, these markets are, you know, like you said, you talk about this. I don't know why the 5908 level somehow
That
is.
was pretty much the low, exactly. That was pretty much the low overnight so far. Now that level's not going to hold forever, but that's certainly
I
good.
would say not.
What was
I
that?
would say it is not going to hold. Um,
Yeah, but that's just simply using a volume profile, and I think everyone who is trading is trying to figure out levels. Instead of drawing lines on a chart, all you need is that volume profile, and it'll pretty much draw the lines on the chart for you in a dynamic way.
okay. I agree with that. We'll see if it holds. I don't know if there's, oil, same thing. It's up. It got up off of, you were texting me last night about some fake CNN story that Israel was going to bomb Iran's nuclear facility. Okay. Let me tell you something. The chance of that is slim to none. I'm not saying they won't bomb them, but why would they bomb their nuclear facility? I mean, that would set up an all-out war, okay, in the world, okay, where people are going to take sides. So I don't expect that, fake headline. Obviously, it didn't happen overnight, but oil traded up about $2 off that. Now it's up about 85 cents. Gold traded up about $25. That's barely up. I'm hoping again that it holds. Um, you know, and that's it.
You're talking about the market holding up, and the first part of a drawdown in the market is always the hardest to kind of time and ride if you want to get short. I just keep going back. I think it feels like the market is holding these levels. They're looking for something, and maybe now we're getting headlines about the tax bill. Congress had an all nighter, and they're trying to push this tax bill through. You have any thoughts on the tax bill, the big
No,
beautiful tax?
the big beautiful tax bill. No, I do not. I
Well,
just think
I'll tell you this. I mean, if they're going to raise that standard deduction for people, and if that's going to be a sizable increase, maybe that offsets a lot of the inherent tax people are going to have to pay up as a result of tariffs. I read somewhere, I believe the incremental increase in the average family's expenses as a result of tariffs is going to be somewhere around $7,000 to $10,000 a year per household.
Hmm.
And for if the standard deduction goes up and all these other tax cuts come into play, maybe it offsets that.
Yeah, I think maybe. I don't know. I'm not really focused on the tax.
It just feels like the market is waiting for some sort of, I don't know, good news or trade deal or something with the tax bill.
Here.
Relentlessly, relentlessly holding on. I feel like it's relentlessly holding on to dear life. That's how it feels.
Oh my God, dude! Let me tell you, you made my day. You brought me back. Okay, you brought.
Good.
I
Oh,
didn't get
that's how
any. I didn't get any
I'm
tea
trying to get you
or
mad.
any
I'm
breakfast.
trying to get you mad.
I'm operating on nothing today. I have no strength, but that actually made me laugh. Okay, the trade deal.
Wait
What
until I
trade
tell you
deal are
you're
you
turning bullish
talking about?
again.
I mean,
What
the
was that?
market is so psycho skewed right now that it is unbelievable. Unbelievable. Listen, we're shorted. It's been frustrating. I know people are with me and we're frustrated. We're getting a little bit of back today. Obviously, I'm not looking at 59.08. I'm looking a little lower than that. I think if we get into the 58.80 area, you're going to see some, stops and selling and reversing of positions potentially. But, you got me crazy here with this trade deal. I mean, I don't even know why are you even bringing up trade deal? Like
Well,
they're not even talking about trade deals. It's not even anything that they're talking about. If they want to listen, the market is exactly fine for them. The market at 5,500 is fine for them. If you look at Scott Bessent, he was speaking again and he's saying, we inherited Biden's, blah, 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 and we're in a financial crisis. He keeps saying it. So we're in a financial crisis, but yet the market is up on the year. So, again, I don't want to beat a dead horse. Okay. We're right on the second tranche now, but on our first tranche of shorts, we weren't right. What's crazy to me is I bought $3 options and they were trading at a buck and a half. I mean, if you can't handle losing $1.50 in the market, you probably shouldn't, be in the business. So I think people need to be patient. Again, we are going to make money. We have in the past. So, you know, I want to, my problem is I'm a pleaser and I want to make everybody happy, and it's very difficult in this business to do that. Um, you know, you can't make on every trade. So I just want people to understand that. Um, S&P again, I believe is 200 to 250 points too high minimally. Okay. You talk about trade deals. Okay. There are no trade deals. I know you think there are trade deals. I don't know why you're bringing up trade deals.
I don't think there are trade deals.
Well, there
I
aren't.
think
And that's the
I think the
upsetting, to
market
be
is
honest with
reading
you, that's the upsetting thing here. There aren't any. Okay. And they don't want any. Okay. So, call it what it is. If they wanted
Yeah,
trade deals,
100%. There's definitely going to be tariffs. Trump is going to release what those tariff rates are, but within that, you got to understand that there's going to be tariffs. It's not going to be zero. So again, it's not a question I think of whether there's going to be tariffs or not. It's going to be whether he opens up all these sectors and industries to fair trade overseas. Let's see if he could do it.
what's funny? We're so different. Fair trade is what? Like fair trade is not putting tariffs on people and forcing them in deals to buy our products, which they won't do anyway. So I'm not understanding. I'm a fair trade
Well,
guy.
let me ask you a question.
I'm
Why
a,
should
I'm
okay?
actually.
Why do you
You
want
want
to
to
do
know what?
business with us?
You know what? I'm actually, to be honest with you, Eric, I'm not even a fair trade guy. I'm an unfair trade guy. Do what you want. If we want to put tariffs on them and they want to put tariffs on us, that's fine. Don't force people to do things, okay, that, let the trade be fair. If we put a 30% tariff and they have a 20% tariff, so be it. Let's rock and roll. I don't understand why we need to conjure up these scenarios of there's no fair trade deal. You open up what? They're not buying. I keep telling you, you're forcing them to buy. They don't want to buy. There is not an American car that will
It's not
operate.
about the cars. It's not
What?
about the cars. It's
Oh, yes,
not.
it
It's
is.
not a
That's
big
his biggest thing. That
other
is his
things.
biggest thing.
There's other things that
Dude,
we
it doesn't
can.
matter, but that's his biggest thing. He wants car manufacturing here. He wants the US to sell cars around the world. That's his biggest thing. Okay? I don't know, rice or whatever you might bring up, that the cars are his biggest thing. That is really our only manufacturing that we're doing in this country right now. So cars are his biggest thing in my mind. And the thing is, no one's buying our cars. Okay, you got to see what they have overseas. Like, you haven't seen models like the models that I saw when I was in Asia. I mean, Toyota's models there. They have a company called Crown. Okay, it's their upscale Toyota. Beautiful. We haven't seen it in this country, but it's beautiful. It's called Crown. Okay, they have cars on top of cars. They're never buying our cars. Okay, they're not even our cars are not fuel efficient. So I think there's so much more out there than making putting 25% tariffs on European autos to have Europe buy our cars. That Why is he putting a 25% tariff on European autos?
Yeah, again, I don't think it's just the auto industry
I'm not
that.
saying it is, but we're talking about that right now. He put a 25% tariff on European autos coming into the United States. Why do you think he did that?
Yeah, like you said, he wants it built in the USA.
He wants it built in the US and he wants them to buy our cars, which somehow that's what you think. They're not buying our cars. Okay, they're just not buying our cars. Could you see like a Chevy Malibu cruising around Florence, Italy? I mean, come on.
Yeah, if you bring up a Chevy Malibu,
Okay,
I
well,
get you.
what car is our top car? Like, I don't know. I mean, you're going against
How about a
Enzo.
good old Jeep? How about a good old Jeep Cherokee? You don't like a Jeep Cherokee? I love that.
I
You
don't
put
know.
that
I
in
like
in that green.
I like an Enzo Ferrari or a
Yeah,
Maserati or a
oh
Lamborghini.
my God.
Okay, come on, dude. I mean,
You
literally,
don't like a Yukon? Why not?
I don't know. I mean, I like a Range Rover. I think
Who
they make a
doesn't?
better. I
Yeah,
think they make.
I'll give you a bearish uh, point here. Target just had earnings a couple of hours ago. They cut their sales. Target is actually down. They cut their sales forecast. Um, so that's a retailer directly affected by tariffs. I was actually watching it, the price reaction. I'm like, I wonder if it's priced in. It doesn't look like it's fully priced in. The stock is down.
Yeah, I mean,
Do you think the market knows everything that they should, or you think that there's a chance for big negative surprises coming up?
I think the market has got an inherent bid in it right now. They want to buy the dip every day. Um, we've seen multiple days in this move where we've had down 40 S&P opening and then be positive within an hour of trading. So I'm not getting so happy. We're not adding to positions. I'm sitting tight. Um, again, I'm hoping gold holds up. It's up about $12. It was up about 30 this morning. Going to exit that trade, and looking around the board, like I said, it looks like the S&P wants to hold. It's only down 36. When we got on the air, it's down 42. Listen, volatility is under 20. So, once it gets above 20, we could take a look at it a little bit more. But things are disturbing me out there. The bond rates are disturbing. It's very, very scary. Um, People don't realize how scary 30-year mortgages are above 7% again. Um, the housing market has recovered, stock prices in the housing market has recovered a little bit, but there may be another down leg there. And the dollar is making me a little bit leery right now. I'm a little bit nervous. I don't know why the dollar is so. I mean, I do know why the dollar is so weak, but I don't know why the market is not reacting to a weak dollar.
Yeah, this to me is the biggest difference between rising rates throughout 23 through 24 and now the fact that the dollar is weak on higher US interest rates. That usually doesn't happen. So there's definitely something more on a macro level that is breaking traditional relationships here.
Yeah. Um, yeah, we have to keep a good eye on it. Like I said, I think I alerted everybody to put the bonds on their screen. I now think that you should also be looking at the dollar index, just making sure the dollar doesn't really collapse in here. It's very disheartening in a way. All of these policies that have been put in place originally, when he came into office, or what people were looking for was they were looking for power in the United States. Just governance that would be pro dollar, and really. When Trump came into office, the dollar against the euro and the British were trading at least 10% lower than this. In currencies, that's a massive move. So the move in currencies is big. People are not paying attention to that. The move, in bonds is also big. That's something to keep an eye on. And again, I would be really, really, really bearish here. I'm bearish, but I'm surprised we're only down 40 S&P points. Looking at, the 10-year at 5, now it's 504 and a half. It's 505. I mean, when is it going to get people nervous? When it goes to 5 and a quarter? I mean, these are the highest rates on the 30-year that I've seen. I don't know, you know, other than a blip last year, it hasn't been here in years. And we talked about this also. Look at rates overseas. You got JGB ticking at over
Yeah,
one.
yeah, I was texting you about that last night. That rate is going pretty high,
Well, it's
right?
only one. It's only 1.5, but they haven't been positive
Yeah, but
in
for their
30 years.
40-year, their long dated rates are going up a lot.
Yeah, which is good. It's good for them. It's good for savers. We have a different problem. Our rates are popping. They're popping on the Bund in Germany is up to about 265. Um, I mean, I'm looking at a chart here, and it looks like 470 is the next stop. Again, a light week, a holiday, pre-holiday week. Not a lot of numbers, so I don't know if we're going to get there, but you're going to start hearing again about this carry trade, or this, bond trade where they're trading the basis, and I think they're getting hit on this again. I think they probably pared down positions, but overall, market, market looks weak. I mean, the thing, gold, which I was a little nervous about a minute ago. Now you're going to want to get long it again. It popped $15. So
Exactly.
you got to be
Yeah,
back.
I want to get long. Exactly. Now I want to get
So,
long. You
so,
know me so well.
dude, I
That's
do,
amazing.
I do. I know how
When you
you are.
trade, do you
You're going
have
to be
me in your
talking
head
about.
the way
I
that you
got
are in my head?
to. What?
When you're trading, do you hear me in your head or no?
No. The
Well,
only thing
I hear
I
you in
hear
my.
in my head is what Thomas puts on the TV, which is usually
Okay.
some crazy station giving us delayed information. But it's just Bloomberg. We can't sit in silence in here. We always have to have white noise going on. So we're focused on it. But gold is gold's up a little bit. Bonds are very concerning.
How would you handle the S&P now that the market is down? What's the market down? 67 basis points. So it's S&P 500. If it opens up right now, is going to open up right at 5,900 even. Is this going to be another, dare I say,
You
iron
know what?
condor?
I'm letting you handle this because I'm gonna just say this. I'm extremely bearish. Okay. I'm usually a little early. I was a little early. Now, let's retrace to the move that we had, dude. This is probably in my 40-year career the biggest up move in the fastest time that I've ever seen,
Yep.
even as big as 2022. I mean, the Nasdaq is basically up on the year after being down over 30%. This has all happened within a month. So when you pull up those CTA indexes, and CTAs can't make money in this. Quant trading can't make money in this. The moves are too extreme and too fast. Okay. And the thing is, everybody stayed too short, too long. And then when the market went up, like you said, they're buying in here. This movie is not going to end well. It's not going to end well. People are going to get hurt here on the buying. And then what I think is going to happen on the next time down, everybody's going to buy the dip all the way down and get hammered. I mean, that's what I think. I don't think that's happening today, this minute. Listen, I
Well,
hope.
we're going into Memorial Day weekend.
I understand that's bullish. Every holiday weekend is
Everything
bullish.
is bullish. Yeah.
It's just, listen, I today we're down 40 spoo handles. Where's the straddle, Thomas?
That's straddle at 35.
Straddle's only 35. I mean, they took they took the goodness out of our market. We had a great market with very high volatility, and now we have low. But today is an interesting one because they've been buying all morning, and it hasn't bounced. S&P's bounced from the overnight low in Europe opening, but overall for the day, as we're gonna head off the podcast, the S&P is down 40, 41, 42. A real day would be down minus 70. So once we get something like that, we're going to get a seed change. We haven't had that yet. So I'm looking for that. Again, we're
I
short.
would just add to that a seat like if we get 70 points without the market rebounding from those lows. Like I think it's got to close down 70, not just intraday low down
Yeah, but
70.
let me ask you, what if we close down 100 today, which isn't the biggest deal? Then
If we
everybody's
close,
freaking out.
well,
So,
the 5 and 8 day moving average on the Nasdaq and S&P futures right now is gone. So I pulled up those hedge fund indices. Those short term levels is something that they trade off of quite frequently, and now those levels are lost. So maybe they put in a little sell pressure and get the market below 59.08 today.
yeah,
If you know,
I know you love that 5908. I mean, dude, here's
well,
what I want to just say to people out there. I freaking love you, dude. We're trading the most volatile, highest priced product in America. It's a $6,000 index, okay? And you're worried about semantics of 8 points. I mean, I'm glad
I'm
that
very
you
worried.
are, but
Yeah.
that 50, when they take that out, they're gonna
Told me one take Johnny
rain on
yesterday.
that.
You
They're gonna
called me
rain
one
on.
take Johnny. So yeah,
What was that?
you called me one take Johnny yesterday. So yeah, 8 points is a
you,
lot.
you are one tick, Johnny. Anyway, I think we got everybody kind of prepped for today's trading. Again, keep an eye on bond yield. If you see another leg up in yield and down in prices, where right now the 30-year is at 504 and a half ish. The 10-year is at 453. I know you didn't see that pop through, but it squeezed through 450. We're at high yields of this move right now ish. So keep an eye, especially the 30-year. And what's interesting, the curve is you know, it's widening a little bit, which I think is negative, for bonds. So I think we might see a little bit more correction.
Especially in the back end of the curve more than in the front, right?
Yeah. Oh yeah, that they're hitting it, which I think is more bearish because it gives them more room. Again, I'm shocked the S&P is only down 40. It should be down a lot more. But again, I think they have an underlying bid in the market for now. We're going to keep an eye on that 5908 area. I would believe they'll take that out. Again, I don't think you're going to see really any crazy sell pressure unless the market gets into the 5880, 5870 area, which isn't far from where we are. It's only, 40, 50 basis points. It could easily do that. I think you're going to see a sea change at those levels where the longs, like in trading, like there's something called control. And right now the longs are in control because really up until today, nobody has lost money buying the market. So no one's going to sell. The only time they look to sell is when they lose control. So I think that control area comes today with the S&P down about 70, 75 points. We could look to that, to that level. And we could, see that sea change. Again, gold's up 10, $12. We're exiting our long gold trade. We've been in it, may go higher a little bit here, but we've been in it too long and we need to put a P on the page, as we say, put a profit on the page. That's the mantra at the opportunistic trader. And that's what we're going to look to do in that. Get off our small losing streak and start to put winners on. I want to take a look at crude oil, but it's just been sitting at $62 for weeks and weeks and weeks and weeks. So I don't know. I don't think there's a trade there unless you see something. But we haven't really touched on that market, but it's been sort of sitting stagnant for a while. So I don't know if you have any thought there.
Yeah, I haven't. Um, I'm not in crude currently, and I don't think there's a trade there right now. I'm with you on that. I'm watching it. I don't think there's a trade there yet.
Yeah. I mean, listen, it looks
In
like a
commodities, I think in commodities. Now, I was mentioning natural gas yesterday. It had a big day, so I'm looking for a little bit of a pullback. I missed the trade. I wanted to get in. I didn't get in, and wound up going up 10% yesterday, which is very frustrating.
Well,
But
that's a good thing to close up on, because we're running late. But it would be interesting to talk about. This is one thing in trading. It's like kind of like psychology in a way. But my question to you is, you come on the air, you give the trade, you like the trade, but then you never do the trade. And I'm wondering
yeah,
psychologically
because
why
go ahead.
that's the case.
For me, it's very simple. I think it's the same for you. Natural gas was already up. I'm looking for a slight pullback to get in. I don't want to just hit mark. It was already up like 5% after the podcast, right? And I know the fundamental situation is bullish to get in, but it's up 5%. So what do? You just chase that 5% up, like I mean,
Well, listen,
that's
for
a
me,
laugh.
we'll go through.
only retail does that, right? I'm not going to do that. I'm just going to wait. I was waiting for that maybe, you know, 1% pullback. It's natural gas. 1% for nat gas is nothing.
Well,
That's a rounding.
we're going to discuss more. We'll discuss more on this podcast moving forward about psychology of the trading, conviction. I'm a very big conviction guy, meaning I I don't have real numbers, but you can really put it in numbers. 1 to 5. Five being the most highly convicted, and my problem is I'm usually a 5 all the time. Okay, I love to be a 5. But if I'm convicted on a trade, I usually do the trade. I test it out, I do the trade. But a lot of this is trading psychology, and I want to get more into this of understanding how convicted you can be versus your P&L versus where you stand in your account. Listen, when I've seen it with you, I don't really want to disclose it. I'm going to let people learn more as our podcast get on, but when you're making money, it's unbelievable. The
Oh,
difference.
boy.
You are so nice when you're not making money, and when you're making money, you're not that nice. So
I
anyway,
think I'm being nice today.
there's a
I'm
lot
being
of
nice to you today.
what? Sorry, Eric. What?
I said I'm being nice to you today. I'm pretty
Right,
green.
because you're probably down money.
I said I'm pretty
Listen,
green. So you got it
listen.
wrong.
Listen, what I
You
would
got it wrong.
say is there's a lot of psychology in trading. We're going to get it a lot into that as we go with these podcasts because I think it's really important. And then I
Yeah.
think you throw in the mix, how convicted you get with your P&L. Like, to be honest, and I want to wrap because we're really going long. If I was crushing it right now, I would be so short. I would have another 5 shorts on my book. Okay. But we're not doing well. So we're sitting where we are. We're not adding to positions, but really trading psychology and P&L are really the most important thing. I mean, they're almost as much as they're probably more than knowing how to look at levels and how to look at charts and all of that. But we'll get more into that. But for today, I'm a little leery of the downside. I think they should be down a lot more since we've been on. S&P is on the low of the morning, trading at 59.1275. Your level is 08. It's only 4 points away. If they really want to sell them today, it'll melt that level. My levels really to turn the market to really have a sea change is about 30, 40 points lower than this. And then I think if we get there, we're going back below unchanged on the year, and the S&P will be down. But we'll be back to everybody tomorrow to take a look. But again, I want to leave it with this: bond yields are ticking up. Now we're above 505 on the 30-year and basically at 455 ish on the 10-year, which are high yield levels. This will be market impactful. Anyway, I'm going to wrap because we're late. Peace, everybody. Have a great trading day. Good luck.